10 assets to own for financial freedom. To be financially free, what it means is that we get a certain amount of money coming frequently that we do not have to worry about our necessities. There are two ways of achieving financial freedom. First, save so much cash that it lasts basically for your entire life. Second, own so many paper assets such as dividend-paying shares and physical assets such as rental properties so that they generate frequent income for you. What is passive income? Passive income includes regular earnings from a source other than an employer or contractor. The Internal Revenue Service, IRS, says passive income can come from two sources: rental property or a business in which one does not actively participate, such as being paid book royalties or stock dividends. Many people think that passive income is about getting something for nothing, says financial coach and retired hedge fund manager Todd Tresidder. It has a get-rich-quick appeal, but in the end, it still involves work. You just give the work up front. In practice, you may do some or all of the work up front, but passive income often involves some additional labor along the way, too. You may have to keep your product updated or your rental property well maintained, in order to keep the passive dollars flowing. But if you're committed to the strategy, it can be a great way to generate income and you'll create some extra financial security for yourself along the way. Passive income is not your job. Generally, passive income is not income that comes from something you've been materially involved in, such as the wages you earn from a job. A second job. Getting a second job isn't going to qualify as a passive income stream because you'll still need to show up and do the work to get paid. Passive income is about creating a consistent stream of income without you having to do a lot of work to get it. Non-income producing assets. Investing can be a great way to generate passive income, but only if the assets you own pay dividends or interest. Non-dividend paying stocks or assets like cryptocurrencies may be exciting, but they won't earn you passive income. Mining. In 1848, 300,000 people arrived in California for the gold rush. The same thing happened recently in cryptocurrency. While people were buying crypto, some others were mining it. Mining crypto meant that a computer is left turned on. It took power and used its processing power to generate crypto. In a definition of an asset, it was a true form of the asset because you have to spend very little of your time to manage it. Renting. Let's take an average Joe as an example. Joe does a 9-to-5 job. Each year Joe would invest some of his savings to own a rental property. The rental property had 10 units and each of them was being rented out. The money started coming in and our average Joe was financially free. Not many people execute this strategy as our average Joe did because it is a slow method. And you might think that you will never save such an amount that you can own a rental property. Hence comes the next asset. REIT. Just like we entrust our money to an investment expert to invest in a mutual fund, we can give our money to invest in real estate. The expert then distributes the rent income to all the mutual investors. This is called Real Estate Investment Trust, REIT. Along with the rental income, the investors also get profit from property appreciation. Precious metals like gold and silver. Some people think that gold and silver are an asset. People like Robert Kiyosaki. They keep gold and silver coins as their prices always go up. Some people don't think of gold and silver as an asset. They think that they are not income-generating assets, meaning that they can't earn anything by themselves. Anyways, the final decision is yours. Do you want to keep some gold or not? Rent out your car. Average Joe again. He works 9 to 5. And he has a car that he rents out for tourism because he knows some friends who own a travel business. Gradually he paid off his car loan and after that, he keeps getting a certain amount of income. Sometimes the issue is that we stop when we have one asset category. But the real financial goal has to be to keep generating assets lifelong. Bonds. If you think it is risky to invest in company shares, you can invest in bonds. Bonds mean that you are giving money to companies as credit. If you don't trust companies, you can also buy bonds from government-owned properties such as reserve banks. The interest rate is almost always higher than in fixed deposits. Agents. Insurance agents earn a certain commission when they sell insurance policies. At times the commission can be recurring, giving you frequent extra income. Digital advertising. You can use various forms of digital advertising to sell your products. Or you can even do affiliate marketing using digital advertising. You just have to be good at copywriting and marketing. Angel investing. What happens is, if you trust a startup, you can invest in that startup. If the startup is successful, your investment is multiples bigger than in a normal investment. But this might not be available to just anyone. In many cases, you have to be an accredited investor to angel invest in a startup. Business. This is one of the best ways of financial freedom. You start a business startup, and if that's successful, it only takes a few years for you to achieve financial freedom. Digital courses. If you have any skill, you can turn that into an online course and sell it. However, you might need marketing skills to sell it, or an audience that you already have. Dividend-paying stocks. Some companies are so big that they don't know where to reinvest their profit. So they give some of their profits to their shareholders, which is called a dividend. The good thing about it is that if the company performs well, the stock price also goes up while giving you higher returns as dividends. Knowledge. This is the most important asset that you have to have. Warren Buffett once said, "The most important investment you can make is in yourself." You have to have the knowledge to execute all the other asset-generating ways we talked about in this list. So invest in yourself. Keep learning.